Hello everybody, Ian Maddox, HMFP. Hope you're doing well. Continuation of our series on alternative asset classes, and this week we're going to talk about real estate. We are in a community right now that real estate is hot and heavy, although I know that's kind of a theme across the United States. Because inventories have been low, prices have been bid up. This is a story that's been building since 2008, 2009, when we had our last really kind of scare in the real estate market. But today we fast forward and we still have low inventories, those that do not even meet household formation. So there's more people that want houses than houses exist, and when you have that scenario, prices go up. So that's just a little bit of a backstory to talk about real estate as an investment class and how you can access it in a couple of different formats. So first of all, let's make some clarification. First of all, real estate is a very broad category. And yes, it's all tied to something. It could be land or a structure or a combination of both. But real estate comes in all shapes and sizes. And a lot of times it depends on what is in that real estate. What is it, right? So that land could be raw land that you invest in. It could have timber on it. It could something that could produce revenue for you, right? It could be leased. But in this case, let's just talk about properties, things that have buildings on them. Even in that case, you may have commercial property, you may have municipal property, you may have residential property, and even amongst those, there's subcategories, right? Whether they're single-family residences or apartments or condos. On the commercial side, it could be retail or restaurant. It could be a hospital or healthcare facility, municipal real estate. So each one of those has a different profile. So it's not just real estate, hey, it's all one thing. It's not at all. There's a lot of diversification that can come inside of real estate. But why would you perhaps want to add real estate to a portfolio? Many reasons. At the end of the day, when we invest, we want either capital appreciation, we want something that will grow over time, or cash flow, or a combination of both, right? We might also want to protect ourselves against inflation, and real assets can do that. We'll have another video that's more specific on real assets and specifically commodities. But for today's purposes, real estate can also be a hedge in an inflationary environment. But going back to this idea of real estate, you want something that's either going to go up in value or produce cash flow, right? You may be living on this, and so that will lean you towards which type of real estate you might be interested in investing in. So again, real estate is another asset class that you might, if it's appropriate, consider for inclusion in your overall strategy in addition to stocks, bonds, cash, other asset classes. Real estate is one that is very much in the forefront of a lot of people's minds right now, and there are ways that you can access that in a manner that is professionally managed, and it may be very diversified, and again, it may be in a specific area of commercial real estate, or it could be a diversified basket of real estate. It just really depends on your specific needs and what you're looking for. In some cases, it can be a growth-oriented investment that really is more about appreciation over time, or it could be an income-oriented real estate holding where you're looking at it for cash flow to live on. So again, where you go with that depends on really your financial needs, whether it's something that's immediate or down the road. Real estate can absolutely diversify a portfolio when used appropriately and for the right investor. So just something that, to be aware of, and if we can ever be of help, answer any questions about real estate or any other asset class, feel free to reach out at your convenience, email, phone, check us out on the website. Ian Maddox, until next time, HMFP.